Welcome to this comprehensive guide on transitioning from contract work to achieving debt freedom. We will explore strategies for managing finances effectively with tips on debt reduction, budgeting, investing, and much more. Here's what we'll cover in today's video. First, we'll tackle debt management, then move on to effective budgeting. Next, we'll discuss tax planning specifically for contractors, followed by investing and saving strategies. We'll present a sample budget and action plan, and finally, some additional tips to guide you through your financial journey. In this section, we will focus on tackling existing debts. We'll prioritize high-interest debts first. Start by identifying them and creating a structured repayment plan. Remember to consider balance transfers for 0% interest options. Once you've cleared your debts, the money that would have gone towards them should be allocated towards savings or investments. Let's test your knowledge on debt management. What should you do first when tackling debt? Is it A, identify and prioritize high-interest debts? B, pay off any debt randomly? Or C, invest in a high-yield savings account first? You may pause the video now to think about the answer, and then say, we will discuss the answer in the next section of the video. The correct answer is A. Identify and prioritize high-interest debts, because tackling those first allows you to save money on interest payments in the long run. Now let's dive into effective budgeting strategies. It's important to track your spending meticulously and categorize your expenses. Identify areas where you can cut back and aim for a realistic budget that even accommodates unexpected expenses. Moving on to tax planning, specifically for the self-employed and contractors. Set aside a portion of each paycheck for taxes and be sure to pay quarterly. This helps in avoiding penalties. It's advisable to consult a tax professional or make use of tax software to estimate your tax liability accurately. Remember to account for self-employment taxes like Social Security and Medicare. Now let's discuss the importance of investing and saving. Determine your financial goals, such as homeownership. Then allocate funds appropriately. Ensure not to neglect debt repayment in the process. Keep your emergency funds in a high-yield savings account for easy access. Here is a sample action plan for a $8,000 monthly income, after taxes, and $3,500 monthly expenses. You should allocate between $2,000 to $3,000 for debt repayment, $500 to your emergency fund, $1,000 for tax savings, and the remaining $1,500 for investments or savings. Here are some additional tips to guide you. Avoid accumulating new debt. Adhere to your budget strictly. Regularly evaluate your financial progress and make the necessary adjustments. If you're unsure, consider seeking professional financial advice. Transitioning to a contract role comes with both opportunity and challenge. Structured financial planning, focusing on budgeting and tax strategies, is essential for long-term success. Prioritize reducing your debt to pave the way for future financial stability. Thank you for watching our video on achieving financial freedom from contract work. We hope you found these insights valuable. Please like, share, and subscribe for more content, and feel free to share your thoughts in the comments below.